don't know. It's kind of one of those risks that's really hard to quantify and really hard to, I guess, characterize.
Yep. And that is a beautiful segue to Disney. So
Yeah,
let's talk about Bob Iger back at Disney. I think a lot of people saw this, even if you don't follow investing that closely at all, because it was a huge news story. Regardless, just a quick overview before we get into the discussion. He is surprisingly back on, I think it was either late Sunday announcement or Monday, after only leaving a few
late
years
Sunday.
ago. Late Sunday.
They always do that. They always release
Yeah, it's true.
information that people don't want to see at times that they think people won't care.
Yeah, during football. Um, the reporting came that there was an abrupt meeting of the board of directors last week saying they did not have confidence in Bob Chapek, the CEO who was Iger's successor, that they left out. In a memo to employees, Iger said, quote, "As you know, this is a time of enormous change and challenges in our industry, and our work will also focus on creating a more efficient and cost-effective structure. Our goal is to have the new structure in place in the coming months. Without question, elements of our media division will remain, but I fundamentally believe that storytelling is what fuels this company, and it belongs at the center of how we organize our business." Now, is that a record for buzzwords of just? I mean, that's just a lot of nonsense in a long sentence. Apparently, his contract is for 2 years, and there are also reports coming out that Iger has been constantly undermining Chapek through the media over the last 2 years. So it seems like this has been brewing for a long time, and it kind of makes sense when you saw a bunch of those articles about, quote sources saying that people are not confident with Chapek anymore. The writing seemed to be a bit on the wall that Iger was manipulating the situation a bit. Now, everyone knows Disney. Everyone kind of follows the company, and we follow it. We're not experts on it by any means, but we follow it, from a bird's eye view. Does this inspire more or less confidence in the business for you?
Less confidence. And the other part is, I guess there's a couple of reasons for that. First of all, it makes me think that you can't move on past Bob Iger because, and this feels like a Bob Iger issue. It isn't like, I would not look at Bob Iger as the savior here. I would say he's done a poor job grooming successors and letting them and being able to actually hand off the reins. Also, it makes me think that whatever we just saw in the financials, which weren't that great on the last report, it's worse internally, whatever's going on.
Yeah, I did see something. And again, this is not, we don't follow it too closely. But I did see something about how they're cross releasing shows on linear and streaming. But the reason they're doing that is because on linear, if you release it on there, you can put the expense under the linear one, and it can mask a bit of the streaming losses. Not saying they're doing that a ton of the time, but again, that could be a way that they're masking streaming losses if they're worse than people think.
Yeah, I mean, that seems like a good way to have analysts stop pointing at your streaming losses,
Yes.
but maybe not the most ethical way. I don't know. What do you think of Bob Iger?
Well, I think when anyone starts learning about investing, you learn about Disney is something you're probably going to look at first because it's kind of an easy case study. And then you look at the three big acquisitions that they made right when he got there, Pixar and then Marvel. Well, I guess Star Wars was a little later. Pixar and Marvel, the most important. You look at those and you go, wow, home run acquisitions, good price. And they really, executed phenomenally on those. But since then, and Star Wars, I would say, is a mixed bag. I mean, commercially, it's been a success, but the reputation of that, um, it's gone downhill for their core fans. I think is pretty easy to conclude. But since the big acquisitions, one, they got late into streaming. They decided to go into streaming in 2019 to embrace the internet, which I think we can say is late to the game. Or when they were basically giving money to Netflix for years and letting them take a huge advantage. Two, he greenlit the $70 billion Fox acquisition, which leads me to another question. Does that huge, I mean, just like $70 billion is a lot. And again, some of it might have been in stock, so the true value can change. But does that Fox acquisition really mitigate, in your mind, the value created from the Marvel and Pixar ones? Because I kind of think that's a lot of years of, say, cash flow that comes from Pixar and Marvel that got thrown away into what, The Simpsons and Avatar and some cartoons.
I mean, it's obviously a stain on his acquisition reputation, but I think it's hard to quantify exactly the return they get on all that Pixar stuff, especially because we don't have the financials, but like the parks and stuff and the reputation for Disney and what people, even Marvel too, like they can monetize that for the next 20 years. They may have messed up on Fox, but Pixar and Marvel are going to be still wonderful businesses for the next 10 years, both by kind of sticking with that strategy of digital content as well as physical parks content. Star Wars is hard to say. The Galaxy's Edge thing, wasn't that kind of an underwhelming release?
Almost everything they've done with it has been underwhelming. Both parks, movies, shows, I would say have been underwhelming. And the interesting, here's what's concerning is is the price raises at the parks. I think that hasn't that been the majority of where the profits have come from over the last decade, or the really nice profitable growth has been just at the parks raising prices. And I wonder, again, yes, it's pretty easy when you have the best parks in the world to raise prices, and it makes sense because people are willing to pay. But pricing out everyone that's not, say, the top 30% of income earners in the United States and maybe around the world from going to your parks because they can't afford to spend $1,000 a day if they have two kids. I think that is a risk of ruining the long-term reputation of your business, because one of the most important things of the Disney flywheel is to interact with the characters at the parks. And I think juicing profits from the parks in short-term manner. This isn't some crazy take. A lot of analysts have said this does risk, kids, evolving and the parents saying, look, we can't spend $5,000 to go a weekend to Disney World if we have multiple kids. And you're going to have to be on Roblox, or you're going to have to be doing whatever, playing video games or something like that. And then that risks them loving other characters and other IP besides the Disney ones, which will not. What's most dangerous about that is speaking of, this is nice for the Thanksgiving theme. It's almost like the stuffed turkey chart, where things will actually look really, really great for the parks until they won't, because it will be hard to see that in the financials. But do you agree or disagree with that risk?
It's kind of hard to. I've kind of doubted how much they could raise prices at the parks for like the last 10 years, and it hasn't slowed them. So maybe they are squeezing out the amount of people that can go, but so far they've continued to raise successfully. Matt
Oh,
H
I
in
don't
the
doubt that
chat,
I don't doubt that they can continue, because there are enough rich people that will go.
yeah. In the chat, someone says, Matt H says, Iger talk is fine, but how do you view the terminal value of Disney with all the IP they have? IP terminal value seems to power your Nintendo thesis in a similar manner. He's
That is true.
certainly right. I personally think both Disney and Nintendo's IP, especially the core characters, are timeless,
Yeah.
and they're going to be able to juice that or monetize that for a long, long time.
Here's the difference between Nintendo and Disney, which I think is why I'd lean into the Nintendo camp, even though a lot more people like Disney. One, Nintendo is only just starting to embrace more than their core monetization, more than their core gaming, which Disney started 30, 40 years ago. I mean, Disneyland, really did start before that, but came into its own with the launch of Disney World and all that good stuff. So one, Nintendo is earlier on in that journey, and two, Disney is much more willing to juice properties where they're coming out with multiple Star Wars stuff every year, multiple, I mean, what, 10 Marvel things a year at least, most likely, and we're talking just visual content. Nintendo, one, is still profitable, and they don't have to do that. So Disney, I think, has a lot less flexibility to increase the volume of content they push out, whether that be any sort of entertainment form. And Nintendo has a lot more room to be flexible within that. So that's why I think it's different. But I agree that regardless of whether Iger is actually an overrated CEO and Disney has been mismanaged over the last 5 years, the IP value is still there. I mean, just because Marvel just started pumping out show after show after show and movie after movie after movie, the IP value is still, I mean, extremely high.